Good morning, everybody. All right. Nice day yesterday. Of course, where do we go from here? And I think the obvious answer, logical, would seem to be up. No doubt prices are a little ahead of themselves, and we'll tell a lot by how much prices pull back or the lack thereof. So starting out with the S&P futures here, wide range bar. Right? So wide range bars after prices have been going up as they are historically tell us that momentum is going to stall. Those that were reluctant to get in, got in at this point and creates a void below. Before we talked about these correction bars along the way, it's kind of like a little of the blast off. And then, this whole congestion area was, the way it came up to it. I'm trying to put that in there. Should have been kind of red, but anyway, it dealt with it bullishly, right? That sideways price action, these correction bars is the kind of price data that you want to see. And of course, these are the futures 24-hour chart. And now new high up there and prices are backing off a little bit, some profit taking. We'll see today whether it continues to go up or not. Just looking at some of the option quotes here. One of the things to be looking for as far as continued upside, what you want to see, you think a little bit of a contrarian thing, but it is what you want to see is the open interest starting to pick up in strikes up above where the S&Ps are right now. So like 55,000 was the highest at one point. I can't show you right now, but anyway. And right now it's like 52,000. 53 is just above it. And in the coming weeks, whatever the correction forms, 5,400 is comparatively low. So let's say 5,200 now. If you look at the open interest going out a month, it's 81,000 contracts. And 5,400 is only 21,000 contracts. Well, that's going to expire tomorrow, actually. That's 5,300. So that'll be interesting to see if it holds up there or not. 5,400 is only 29,000 contracts. So you want to see some bets at higher prices, kind of. And then, of course, the mechanics of what market makers have to do, it helps push prices up. But right now, greater than 100% retracement, wide range bar. Maybe things go a bit higher, but we know that it's likely that we're going to get a stall in some kind of choppy price action. And barring any negative news that surprises the markets, it should lead to somewhat higher prices from here. You see 5,400. That's the futures. It's not the S&Ps, but that would also, of course, be a sticking point. We'll see if that gets there or not in the near future. Anyway. Looking at the spiders, they're coming off the high a little bit there, but unchanged. You can see my cursor on the daily chart right at the top of yesterday's bar, and see a lot of this overlapping price action at that resistance. And so this was a tell. Right? It was like, how much would it gap and go? We had this discussion in the green room. Would it be a gap and go? I didn't think it would go as that much. Kind of, depending on the size of the gap, if it was excessive, it would not have been a gap and go. Meaning, if it would have gapped up here, it would have been highly unlikely because it's too much too fast. Whereas you can see, and this is another concept from the gap course, is that when you look at a daily bar like this, a green bar, what was the intraday structure? How did that form? Meaning, was it moving up like this, like a wider bar? But just as you look at a wider bar, it doesn't mean it had to be up all day. It could have went up. It could have, been flat and rallied all afternoon, or it could have went up in the morning and flat in the afternoon. So we had this move out of a base, and the gap really wasn't that excessive, and that did help, prices be able to move higher from there, stopping just at around 530. So, coming off of the low, not a big deal. There's an unfilled gap. I've marked them on some of the charts. It's a good idea to put alerts there. As prices come down at some point, to be aware of there's an unfilled gap. Could be days from now you forget about it, and so let the computer monitor that for you. The alarm goes off and brings your attention to it. All right, I got a little arrow there for the correction bar at that time, and so I like to mark up my charts. It's a good practice with this kind of thing. That's really not a correction bar, more of a continuation, but these correction bars are gap down. Dan and I showed some of these yesterday in MT Live, where you get a strong move up and it gaps down and closes well. This didn't close deep into that bar's range, but it was a decent kind of correction bar in this consolidation sideways at resistance and continuation. All right. SPX. These are the numbers from yesterday. So I want to mention neither one of them were hit. And most, probably, 99% of the time or better, these numbers provided pre-market never get hit. Because I'm picking the extreme. And as we look at where it is on the chart and make an assessment as to the probability of it. Now, to do those and make money, you need to go wider than what most would do, meaning the distance between the strikes. And say, well, what if that gets hit? Well, yeah, like any credit spread, it's going to be painful. So you have to monitor them, but using these as a guide as to where the greatest probability is of prices won't hit. As prices approach these, especially if it's in the morning, you can go higher than this, right? And vice versa if it's going lower. And if you want to do a tighter spread between the strikes, you can do that. But if you were to go 20, 25 wide, 30 wide, you'll make your money. And the probability is it's not going to get hit. And if you watch these pre-market reviews, you know that probably greater than 99% of the time, these don't get hit. This is based on where there's enough premium and technical analysis. So today's, let's adjust this. Let me just double check the numbers from what I wrote down before. They do move a little bit. And sometimes they move a lot. 50, 40. Yeah, so since prices have come down a little bit. Okay. And so you look at this and make your best educated guess. What's the probability? Right? That's the big technical of credit spreads. What's the probability of prices hitting that strike that you're looking at? And when you look at the charts, it becomes an easier assessment than with these people that use Greeks would use. And so what's the probability of either of these getting hit today? Well, I would say unless something terrible happens today, this bottom strike is not going to get hit, even though prices are short-term extended here. The odds of going all the way back down to yesterday's low, I think, are pretty darn slim to none. Something bad would have to happen. So what bad could happen? Are there any other economic reports coming out? Most of them, they're out already. I can just take a peek here. There's some number coming out right in a few minutes. Industrial production at 9:15 is not a big number. The jobless claims were, and that wasn't a big deal. And you got a couple of Fed guys talking, but they're not going to say anything of significance at this point. At 10:30 and 11:30, a couple of auctions later on. So it doesn't seem to be news risk at this time. Can it go up here today? I think so. I mean, look, unless things collapse early in the morning, I think a little backing and filling, that it's possible to go up there. And I told you yesterday we'd look at the internals, and there's a little gas in the tank here for sentiment. And looking at the equity put call ratio, it's just touching this band here. So we know based on our internals, and these high points are never pinpoint accurate. Usually could take a few days, it could take a week, but of course we need to get confirmation of price, and that could just be a gap up of significance tomorrow, possibly, where to drive prices up. In any event, the internals tell us when risk is growing on the long side, and common sense would tell us, just based on the price action, that that's the case. But there's plenty of stocks that are playing catch up, or are likely to play catch up. The other thing to keep in mind as those internals do reach an extreme, because we create a lot of bottoming patterns, which are not my favorite, but they do work out, especially when there's gas in the tank. When I say gas in the tank, it means that these have not reached an extreme, but those bottoming patterns have a higher tendency of failing. So bottoming patterns that we had on deck yesterday was this AMD, and semiconductors could say relatively strong. These could be catch up trades. So this has already gotten a very nice gain in it. Other bottoming patterns, like CRM had a great day, probably going to stall 50 MA in there, but it's useful piece of information with those internals, besides just looking for the market to stall and maybe some kind of correction. These bottoming patterns have a higher tendency of failure. And you can say, well, it makes kind of sense, they underperformed. Well, we understand they underperformed, but the idea of playing catch up creates short-term opportunities for put spreads, as well as like intraday. You can see this is continuing to inch up here toward that 50 MA target and that unfilled gap. We'll cover more of those as goes along. Something I noticed this morning, interesting. So the Dow coming up to 40,000, big whole number. The media will have their party hats on if that could get hit today. If it can close above it, of course, that'd be a big event, significance, just being a big number like that, first time and so on, be great. But it's interesting because it's a divergence from other futures markets. Look how well below the Dow futures are, versus the cash. So usually futures will lead, right? So futures traders are trading the technicals, of course, primarily, of course, not fundamentals, but seeing what stocks are performing. For example, if UNH was doing really, really well and financials were doing well, that would be supportive. That keeps going up. I don't know what any of those are doing right now, but I thought it was interesting that these futures didn't push up to a new high, whereas the S&Ps pushed up, and S&P SPX pushed up, and they didn't. NASDAQ futures pushing up here just looks like a peekaboo above that, and notice the 60-minute little failure bar there. So there's a void. This kind of bar right there tells us that buyers are getting a little tired, a little less aggressive, profit taking, normal. And of course, where's it going to pull back to? Now, where's it going to pull back to? Where's it going to stop after a bar like that? So we use an arbitrary, ideally the middle of the bar. And where's the middle of the bar? Just give or take. That's about the middle of the bar, right? Below that, give or take, somewhere there. And there's nothing here. There's some support right there. All right, so what we need to see, right? The ideal is, and this would not be a 1, 2, 3, right? Because it's already extended, but some chopping around would be in order, I think, to consolidate this. So, but that 1, 2, 3 pattern is one in which you have the void and it builds a support area. We'll see if that plays out. If it can build that support area or not. Russell, well below the prior high, so relative weakness, maybe continue to play catch up. We'll see. Start bringing your alerts under prior bars lows. Transports didn't do too much. Right? Underperformed, kind of a negative, but maybe some catch up. We'll see. If these transportation stocks see some bottoming stocks, maybe this can play some catch up or not. If you know what Dow theory is or heard of that or whatever, this is certainly not confirming the new all-time highs in the Dow, but it's just theoretical kind of stuff about markets. In reality, who cares? I mean, whatever's doing well, we look to go long. Whatever's doing poorly at the right times to short. And something like this is just something, in the back of the mind is like, okay, the transports aren't doing well. Well, okay, don't trade the transports, or can they play catch up? So with transports, this is picking up, doing well. It underperformed, so this is a part of the Russell, and the right, regional banks cleared these highs. They didn't do much yesterday, so we'll see if these can keep going or not. Tech index pushed up. Looks like, I'm pretty sure that's a new closing high. So one of the themes we talked about, I think it even started last week, was we needed to see semiconductors kick it in, and they did. NVIDIA, I talked about that, this little sideways pattern there. And where is that now? Oh, looks like a little gap up. It's given some back, but that's coming into resistance. That reports earnings next week. That's going to be a big thing. Like on the 22nd, next Wednesday. Keep that in mind. And XLF, my little drawings there, near high. So everything's moved up. Bitcoin, we talked about this head and shoulders bottom as it was developing. Yesterday had a big day. It'll need to consolidate here. So those stocks that trade with that, keep an eye on those. Got a decent weekly chart, looking pretty good there. And see interest rates are up here a little bit, not a big deal, but this is trending up on the weekly and at a turn point. So as we get into next week, I would say if we see these interest rates start to curl up, oil, see it's green here? It's bottoming tail bar, and look at USO. I mean, these are going to be the kind of things that might help jitter the markets. Interest rates moving up a little bit, oil moving up a little bit, the inflation concerns, but that doesn't take away that, these indices made new highs, and we'll just see how they correct. All yours, Dan.
Good morning. Yeah, you mentioned that XEC yesterday. Let's see what alarms I have going off. We're very, fully bullish in terms of our open positions, but you got to hit the throttle at the right time, and it's more switching over to management mode now. You mentioned cream. My alarm went off. We have a put spread on that. I missed it in the morning, or I would have given that as a directional. NVDL or long as a directional and put spread. I sent an alert to sell one. Oh, look at that. We got the high tick. I said sell 1/3 at 43.84. And it still looks higher, but because it's gapping, and when the market nearing a stall, that's why I did that. We entered AMD. Greg talked about. We have a put spread. I tightened the stop. A Charlie India alarm went off. Look, way down here, there's one print. There's not much volume though. And that would be a beautiful gain if this thing's gapping down $4. We have they put debit spread, and I have no idea if it does gap down. Is it because of Charlie Bravo gapping up? I have no idea. But the stupid news on this, well, I call it stupid because they had Buffett announced taking a stake in this, that in the 10Q that was released last night. So it's just the retarded mentality of so many traders just blows me away. But is there one iota of fundamental value change from yesterday to today? You know, but for any other news affecting the industry or whatever. So just because Buffett said he took a stake, you're going to gap this up to 274, which is off my chart. It's mind boggling to me. So I'm going to watch this for a bear call credit spread that expires tomorrow. Here's more insanity. The stupid meme traders back. And when this thing gapped up here on Tuesday, and then I was looking to sell call spreads. But guess what? At the time, they only had, I think, 47 strikes. I'm like, dude, what is this market maker doing? Give me out of the money calls to short. So, when you get caught up in this meme, meme and or pump and dumper and or over the counter, you're swimming with the sharks. Um, so you get what you deserve. I have zero pain for you if you bought that cap up and you're still sitting with it now at 34. My response to you is, I hope you have learned something. Oracle here, 123, looks great. I have an alarm at 122. Let me put that in a window. So see, we're going to be very selective on new trades. In this, it's probably only 1-to-1 for a swing, which is the problem. So I think it's more of a day trade. Ideally, it'll just go sideways, 30-minute high, then we could have a tight stop under 121. So that's on my list. And those are all my, Ether alarm went off. Or maybe that one, yeah, that went off yesterday. But yeah, this is on my list to start scaling into. All right, let's look at earnings trades now. Cisco being the big one. And this is another one. I think Buffett said he took a stake in this. But now it's coming back. Yeah, gap up to, last night or pre-market even 52. That's a big old gap. But looks like a gap and crap to me. Maybe also one DTE call spread. Grab 374 gap breakouts to see. I want to see what my target is. My target ain't big. So even though it's a bullish gap, I don't have any interest. This I'm going to keep on my list. I have an alert at 521. I ran big old bottoming pattern with all these flat converging MAs. But tip, Bitcoin stock 250, 30-minute high. I just don't know the target though. I'd say 260 to 280, which is not a whole lot. It'd be a good put spread if they had a strike at, 2.25, for example. But they don't. I'm just telling you my logic. This is a big symmetrical triangle. Look at this 200, just coincidentally marking these pivot highs. Here's higher pivot lows coming into the apex. Now it's a gap breakout. So the problem is the gap's too big. But hypothetically, I like telling you what would make it a tier one gap for me. If it were gapping up just, right around this week's high, 22.15, then I'd be all over at a 10-minute high because then my weekly has room. The gap's too big. MFG opening, well, it shows it down 14 cents, which on a $4 stock is huge. But if this were to give us a 1, 2, 3, then it looks good for tomorrow. That's junk. BKKT, bottoming pattern, will come back. CPA. Here's a gap and crap call spread candidate. I like this. Let's put this on a list. CPA. I see IBM coming in. I had posted this as a 30-minute high. Gap breakout from W bottom, but it's, deep retracement now. As long as it holds right here, it's still good to go. If this starts getting deeper, then I will cancel it. Spur gapping down. Looks lower. That might set up as a day trade short. Target 200. Walmart, I know the media was all over waiting to see what this does as a test for the barometer for the consumer. Is that all-time highs? I don't feel like blowing it up right now, but sure as heck multi-year highs. That's a bullish gap. Well, a cream up alarm again. Let's move stop 30-minute low on our put spread. Move stop. Second. And I said yesterday bid 20, and let's see what it is at the open. We might get better than 20. We will see. All right, so we got less than a minute to go here. So let me put this in my tops here to see what the midpoint is at the open. 275, 270 for next week. Midpoint, which really closed at 50, but all right, I'll watch that. More alarms here. Charlie, India. Okay, shoot, it did not gap down. All right. So Charlie, India is already managed. So nothing to do right now. Ooh, up alarm. I mean, Greg was trying to get me out of this beautiful thing. I said, no, sirree. Oh, it's going higher. MA. All right, we're gonna have to kill this MA. We had a call spread that went against us with the strength of the market. And see that's the risk of getting too exposed into numbers. The bulls took over yesterday, but we had very little, I think only 2 positions called. Well, we had that bear put debit spread on Charlie India. This was the only bear credit spread. All right, cream is 34 midpoint right now, but I'm sure it's a little spreading. What MA do we have? 460 for next week. Hold on, Delta 20. MA 460. Yeah, this is way against us. Iran alarm. No rush, but see, it recovered from that gap down. So it's a watch, a PDD for Delta 20. Yeah, I'd say 30-minute high. I think based on the consolidate, that's a bold rectangle. I think it should get through that tail. It's a nice 15-minute chart. So the answer is yes. I would just, when I say 5, 10, 15, 30, it's just a matter of how confident you are in the pattern. But it looks good. But so 30-minute high is more data, more confidence. Cream. Set a new alarm. 286. 291. Yeah, Greg. So on Buffer, all I was saying was I went to our Facebook group to make sure it was there, and it's not there. And so
Won't post to group, Dan. And Facebook changed some of their own rules as to posting to groups.
that's
So
called our main page is called a group.
no, the company page it should post to.
No,
It
yeah,
won't post to the group.
Okay, so you're saying yes, it is a group, but then you need to post it there manually. We got 2,300 people there, so you got to
I'll
post
look.
it twice.
It should have posted there.
All right, we'll talk later. All right, NVDL still looking good. Oh, I had a Beezer alarm go off. Okay, good. I had an alarm at like 2940. Okay, but still, we sold a put spread on that yesterday. That needs to hold right here for retracement purposes. I mean, we had the 28 strike, so it's not disastrous, but rather be gapping up. And that's what say Home Depot, the yields falling and so forth. MA. Yeah, yeah. Oh, I didn't know you were in that, Alex. But yeah, it looks horrible. I mean, it looks bullish. It looks horrible for shorts. It's a big, clarification. Yep. So that's our only short position in the weekly options trader and our only loss. Shoot. Only loss for the week in the weekly options trader. Yeah, I tightened the stop on this pre-market. Here, I don't know if I gave it to you. All right. Remember? Let me go through. What's this food stuff? Here, US food. Look at US food. Small. This is multiple patterns. It's a small buy setup. It's a 1, 2, 3. And it's also a small bull flag. But that's bullish these last 5 days. IBM doing nothing. I'll set an alarm 168.80. But see, I like gap reversals better. I'd much rather this thing gap down and go up, like TPR. See, that's why I was so confident in this pattern. And remember the discussion I said, I think it's going to go through this prior pivot because of the strength of the gap reversal. So let's move stop here, 42.30. 42. Ooh, alarm again. Look at our little hua. So here now, 531. Texas Roadhouse, Aichi. I know that's yours. Alarm. No rush to get in, but still nice price action. CPA. Y'all weren't helping me. What did I say? CPA and Chuck. Call spreads for tomorrow. Done. I thought you're my assistant in these gap credit spread trades. See, this just gapped up out of stupidity, in my opinion, of these just idiots who just probably follow some Reddit dude. Buffett bought accumulating a stake. Buy it now. Oh, okay. Good idea. Such an idiot. Such an idiot. All right, AD line negative 460. And VIX. Wow, VIX took a nosedive yesterday. Look at that. Wow, that's a yearly low. Man, here's no fear on the street. He looks good. Let's set alarm 158. And I gave a target of the first third, 162.75, I think. So it might hit here shortly. 162.85 is what I said. So we're set an alarm there. Come on, we're 40 cents away. That are really good spreads. Snow is fine. Zulu Sierra, fine. We closed half yesterday in the spring. Let's look at other opens here. Alcoa, fine. AMRX. ASO, we're short. Beezer, Charlie India with a stop 345.23. MDT alarm. Let's move stop here now. 84.26. Oil, flat. Yeah, it's just flat, nothing. FIBK, Motors, IBM alarm. All right, it's still fine. 30-minute high. I'll leave it. High band. I had moved up yesterday's low to lock in a game. Who we know about? NVDL we know about. That's 42, 48. Give a new target. Mister up $6, but extended intraday. Next target, 44, 44, 85. Yeah, yeah, that was oh, light speed. Yeah, yeah, that's a something bar, sure. Ideally, we get a 1, 2, 3, but the market doesn't care what we want. Iridium, yeah, 3080. Oh, that's Siri. Looks horrible. Iridium 3080. Yeah, big old bull flag daily, little buy setup weekly. General Motors, we did. Yeah, thanks, Don. I think I read that there were three speakers today. We'd like in a covered call because this dog is doing nothing. Our Siri is 5 cents from the stop. Square, we're still a dollar unrealized loss. Let me set new alarms 72.15. Seven, break even 75.3. Our gold, our stop is 128.20. So just let that play out. Tossed, bullish price action. That's a small rising wedge. TPR, I tightened stop already, let it play out, but 50 MA was my target. We only have a third left. And then Tesla dog. This stock's just high risk. Apple still churning. Nice gap over that red bar. Nice 15. ASO, low alarm. The cream turned red.
E. Kroger, Dan?
No, I
Good
said,
thing.
well, yeah, I know, that's incorrect. Yes, I saw it pre-market and I set an alarm at 54:35.
uh,
Yeah, I saw it pre-market. All right, ASO. Put an alarm at break even, 55.68. RCL up alarm, is that you, Ike? It's either Ike or Sam I am. Yeah, still nothing to do. Early alarm. I'll let you watch it. I think I read Netflix was whipping around yesterday on, yeah, two news items, something with their number of subscribers, but then, yeah, the NFL, they get to, I don't know, two games, something. Meta was weak pre-market. Wow, look at Cisco. That's a nasty reversal from the gap to 52. This is another one where these idiots got sucked in with a Warren Buffett ad accumulating. They deserve it. I mean, I don't want you to, I don't wish people go around losing money, but if you're that stupid, you maybe losing money will make you find master trader and say, I'm consciously incompetent. And that's where we get a lot of new clients that finally realize that. All right, this thing just slow cruise here. Sam, do you have cruise control in your Pinto? Or they did not make it back then, probably. Because that's what this is right here. This is your Pinto going 38 miles an hour just on cruise control. Boeing? Yeah, he's also in the news every day. So Boeing and Tesla, you got to be careful with, among many others, but those are two of our usual suspects. Right. BA. Yeah, it's just no good pattern though, except for day trading. Hey Patrick, do you know who BA is in the A team show? And do you know what it stands for? So that's a two-part question. Darn, you're good, Sam. All right, so you gave Patrick what they call an assist. So now he owes you one. Do you want to go for part three question, Sam? Regarding BA? What did they do to him every time they had to fly? Oracle alarm. Well, well, true, but your use of words is a little misleading. Yeah, they had to drug him. He was too big to box and knock out, but yeah, they had to drug him. Um, all right, Oracle 30-minute high. I mean, yesterday's high after 10 a.m. Let's put this in this window. Oracle. Look at deer got wet. Yeah, so I had Kroger right here in my carryover list. All right, let's go through these earnings now. Cisco disaster reversal. There's that IREN I said to keep an eye on, bottoming pattern. Batet is already at its target. ZTO pulling in. AMD just met its third. Ooh, there's a bull trap and also a small bear island reversal. All right, AMD just met its third target. 162.85. Somewhat arbitrary, but out of a third.
It's at resistance and that pivot. So I'm out. IRDM coming back up, getting a little stronger. So IRDM came off of that low. It's not at the high.
Yeah, I got an alarm 3080. All right, paquet. CPA, I was looking for call spread. Walmart's holding very strong, but yeah, deer would be in call spread on a bounce. He's usually spready though, spreadier than cat. So 417 for next week. 60 by 148. See? Yeah, stupid spreads. Nice. Got whacked. Look, today's volume is already greater than yesterday. There's a pair gap that bullies. Wowzer. This will be a no-brainer put spread if there's any juice down there. I'll even go out to next week. The 6.5s. 5 cents by 15, not enough. But I'm going to keep it on the list. If we can get a 1, 2, 3, 4, then similar to that tapestry, I think it will go through this and then target the gap fill. So obviously your stop can't be the day's low, but if I get a 1, 2, 3, 4, then it'll be under the low of those two inside bars. Yeah, LSPD had earnings, Sam. So yeah, that's an igniting gap. Absolutely. Oh, Sam. Wow. Did you sell puts on this, Sam? I know you were talking about the tens. Good job. I didn't do any last night. This thing could be a call spread also, accelerating into earnings. There's no weeklies. So that's the problem. All right, so of all those earnings, I only kept two of them to watch, UAA and LSPD. We can tell you the stop now on AMD. Did not come under here. So how about 158.28? Green low alarm. So actually we're out. I moved it to 30-minute low. And see why I was trying to get us out of some? Oh, I think I said 5-minute low, perhaps. I did on one of these gappers. I forget which. AMD looks great. Let's see where our put spread is. 148. $23. All right, we did not get our first target. Let's just do it now in the strength. We're 50% max profit in one day. Take it. And MJ, let's move stop here. 398.
Big red 5-minute bar down markets.